Hello everyone, this is Jeevakan. In today's video, we'll discuss about the trade which I took in Jubilant Food, and we'll discuss about the entry point, exit point, and the overall idea behind the trade. So let's get right into the video. So the trade which I took is purely based on technical analysis, and it was a short trade which I took, which I holded just for 3 days. So let's look at the logic behind the trade. So I have Jubilant Foodworks chart right now. As usual, let's zoom out and look at the larger time frames. So let's change it to weekly time frame. What I'm seeing here is a clear trend line, and there are three resistances here where there are proper rejection. And the fourth time it had a huge breakout, and after the breakout, Jubilant Food almost moved 100%. But because of the recent fall which was done because of the profit booking, Jubilant Foodworks came back to its important trend line, which is acting as a support now. The trend line which was once acting as a resistance, after breaking out, should act as a support. So let's discuss about the entry and exit points. So coming to the entry point, so I entered over here. So why I entered over here? Let's zoom in and look at the 1 hour time frame to understand better. The important reason is that it once respected the weekly trend line and it went up, and the second time it came back, and I thought let's take an aggressive bet by going long. So what I did was I went future long at a price of 468 rupees. But in my perspective, I would say that this is not the perfect entry because the trend is still bearish and the probability of the market going even further down is really high. But on paper, this might look like the best entry, but the best proper entry would be around this level above 495, where the momentum was clearly on the upside. So this should be the proper entry above 495 or 500. The reason I entered quite aggressively at 468 is because my stop loss would be just below this candle below 450 rupees. So the stop loss would be really low if I enter early. And that's the main reason I entered the trade too early, which I normally don't do. Next, coming to the exit point, I exited the trade around 558 because this zone around 540 to 560 would clearly act as a resistance because of the resistance zones you are seeing here over here. So I exited the trade around 558. If you can look at the screenshot here, I made a profit of 56,000 rupees entering at 468 and exiting at 568 rupees, where I made somewhere around 90 rupees profit. So let's look at the capital deployed. So the capital deployed for going future long is 1.4 lakhs rupees for this particular stock, and the returns made is 56,000 rupees, which is almost 40% ROI. So what I'll be doing is I'll be looking to re-enter this stock if the stock closes above 570 decisively, keeping stop loss below the recent low. So what I'm expecting is the stock to consolidate in these levels between 540 to 560 for a while, and then there will be a huge breakout on the upside. That's what I'm expecting, but let's see how the market revolves, because the market totally depends on how the global market is behaving right now. So we cannot tell clearly based on the price action. That is why I booked the profits early and moved out of the stock. Now let's look at the risk to reward ratio. My stop loss for this trade is just below this trend line, which is somewhere at 450 rupees. I entered at 468. My total risk is 18 rupees. And I exited the stock at 558 and I gained 90 rupees profits from this trade. So the risk to reward ratio is 1:5, which is really high. By risking 1 rupee, I made 5 rupees. By risking 18 rupees, I made 90 rupees. So that's the overall logic or the overall idea behind this trade. The idea is that you should lose less money by gaining more profits. That is how you have an edge over the market. So that is what I did over here. So breakout trading totally relies on how well we interpret the charts and how well we read the candlesticks as well. So these things will give an overall idea on where the market will go, whether the market will go up or go down based on the momentum of each candlesticks. So candlesticks analysis is the most important thing when it comes to breakout trading. So this was the idea behind the trade. And one important thing which I would like to pinpoint is that predicting the stock direction is not actually tough, but predicting the stock momentum is actually tough, and it is next to impossible. Even I didn't expect for the stock to move 20% in 2 or 3 days, and I was fortunate enough to book the profits and move out of the trade. So in conclusion, a proper breakout trade will give you decent profits if you follow the proper rules. So that's it. Thank you so much for watching the video. Signing off until next time. Cheers.